Now for global business updates, Rotus Oddiri joins us. Good morning, Rotus.
Good morning, Dr. Bassi. Good morning, Ayo, Rufai, all our viewers. Oil, energy. Nothing much has changed. Okay, actually, something has changed, though. President Trump yesterday gave some conflicting statements, but said the war with Iran, he can say it's completed and it should end soon. So it drove oil prices down. So now you've seen Brent crude coming down to $93 a barrel. West Texas, 89. RBOB, of course, is your benchmark for fuel in the U.S., what Americans are paying for it. That was over $3 yesterday. It's now $2.70. And then we've got European gas futures, which are still on the high side, with Qatar cutting off LNG through the Strait of Hormuz. So 55 euros 86. That's still up almost 5%. Now, here's what Trump. So over the weekend, Pete Hegseth, the Secretary of War, Defense, whatever you want to call him, said that the war is, things are just starting, this is just the beginning, because he likes to talk like a tough guy all the time, right? Meanwhile, Trump said, okay, it's almost over. So listen to this. A journalist asked him, said, please, your defense secretary said things are just starting. You are saying it's over. Which one is it? And Trump said it's both. So here he is.
Yeah, please.
Thank you. Thank you. Mr. President, you've said the war is, quote, very complete, but your defense secretary says this is just the beginning. So which is it, and how long should Americans be prepared
for this war? Well, I think you could say it both. It's the beginning. It's the beginning of building a new country, but they have no Navy, they have no Air Force, they have no anti-aircraft equipment. It's all been blown up. They have no radar, they have no telecommunications, and they have no leadership. It's all gone. So, you could look at that statement. We could call it a tremendous success right now as we leave here. I could call it, or we could go further, and we're going to go further. But
Just want to remind everyone, we are 1 month away from the 1-year anniversary of the Liberation Day. A year ago, where there was complete chaos across the markets, there was a meltdown, tariffs. So coming up on that 1-year anniversary. And here we are now in 2026 with more chaos. Comments like this lead people to just scramble. I'm going to give you 3 examples with the G7, Korea, and Dangote refinery here in Nigeria. First off, Korea says they're going to apply subsidies to fuel prices, that they're going to cap them in order to try to reduce the impact of rising prices. But they're unsure. They said it was going to start swiftly and immediately. I think they're implementing it today, but they're a little unsure because comments like that suggest, okay, if he's going to say they're stopping, then that means oil prices to fall. Maybe we don't have to do this. We move to the G7. And that, of course, remember the G7, there was a big 1970s oil crash because the Middle East was strangling oil supplies. They set this up and put up reserves. You got Canada, France, Germany, the EU is part of it, Italy, Japan, UK, and the United States. They had a meeting yesterday. I think it continues today. They said, okay, we're going to consider tapping our oil reserves in order to try to augment prices. But again, this was yesterday. Then Trump comes out and says what he says. So I think Japan is a little hesitant to open up the taps because these are emergency reserves. If you don't have to do them, then you're wasting them. And then if you do use them, what if the conflict is extended? So that's them. Then we get to here in Nigeria, where David Bird had a press conference, the managing director, CEO of the Dangote refinery. And I think this was a very, very important press conference for people to pay attention to because, one, he talked about the input costs for the refinery. A lot of people are still talking about the Naira for crude swap. And every time I talk about selling crude oil to the Dangote refinery, I keep saying at what exchange rate. Although our exchange rate is stronger, the dollar is weaker, meaning that dollar-priced items will cost less because your currency is stronger. But listen to him talk about this and do pay attention to what he said.
What are we doing? We are fully exposed to the international commodity market. That needs to be widely understood. We purchase, even under the Crude for Naira program, we purchase Nigerian crude from the Nigerian government at international benchmark-related prices. We then pay international freight rates and international insurance rates in order to bring that crude from the terminal to the refinery. That's about 30–35% of our crude intake, as I've mentioned in previous meetings. However, we're designed around Nigerian crude, so we actively seek additional Nigerian crude cargoes. We buy those on the open market in US dollars. Historically, that's often changed through multiple traders' hands before we get access to it. And all that does is add further costs and premium to purchasing those Nigerian barrels and processing them through Dangote refinery.
One more from him on supply, the very, very important part of all this. Even though prices are going up, Nigeria has not seen any more fuel queues. Here is David Bird.
But with a domestic refining industry supported by the government, with the domestic crude production, Dangote refinery will continue to meet all of Nigeria's refined fuels requirements. However, we are exposed to the global commodity pricing. So pricing is a discussion for government as a crude producer. But as an independent domestic refining industry, we will continue to ensure our operational continuity, and we will prioritize domestic supply and continue to ensure that Nigeria enjoys what it has enjoyed only for the last 18 months, 2 years, and that is fuel abundance and not fuel scarcity.
Just going to run through the rest of this, moving away from that. Saudi Aramco profits were down because oil prices were down last year in 2025. Full year profit down 12%, Q4 profit down 20%. They still paid out $85.5 billion in dividends. It was about 45% less than the $120 billion they paid in 2024. Again, average price is $64 a barrel in 2025. Moving on from that, Saudi Aramco during the earnings call said they're going to prioritize the East-West pipeline. So they're going to try to take away oil from the Strait of Hormuz and get it over to the Red Sea. But the Houthis are on the other side of this, so there's still a risk. And this pipeline only does about 7 million barrels. We've lost about 20 million barrels through the Strait of Hormuz. So the Strait of Hormuz is Iran's main leverage on what is going on and keeping energy prices up. Moving on from there, I think Asian markets up. Nothing more to say here. The South Korean Kospi led the way. China announced its trade numbers, $213 billion trade surplus. So it's just about 20% higher than where we were in January, February of the prior year. So exports to the EU and to Asia. And then Nigerian stocks were up. The oil and gas index up 2%. Eterna PLC up 9.9. Corn oil, Oando, oil and gas still very much a play on the Nigerian stock exchange. That's all. No, we don't have any time.
All right. Thank you so much, Rotus. We're out of time now, but thank you for bringing us the updates this morning.